If you can hear me, sure you had a wonderful weekend. You're welcome to tonight's session. You're welcome. You're welcome. How you doing? If you can hear me, drop your comment. I want to be sure you all can hear me. Am I audible? So we'll go straight to business. If there is any pair you want us to analyze together tonight, please drop it in the comment section. We have just 25-30 minutes for today's session. So if you have any question or you have any pair you want us to analyze, drop it in the comment section. You guys can hear me, right? Mr. Paul. Evening. Few minutes, please. Okay, so the first pair we're looking at is Australian dollar USD, which is one of my preferred pair, Australian dollar USD. So what can we say on Australian dollar USD? We need to start with the weekly time frame. So looking at it weekly time frame, it is obvious that Australian dollar USD is bearish, right? Because last week candle closed below, you can see this key level, key support level. This key support level has become a resistance level. Can you see that? It has become a resistance level. It was a support at this point, support at this point, also support at this point, and last week candle closed below this support. So this tells us that we have more supply than demand. Okay, and when supply is higher than demand, we look for sell opportunity. It could also be that this bearish move, was to clear liquidity at this previous low. Okay, so as you know, when there is a breakout from a key support level, price is expected to pull back to test that support which has become a resistance before going bearish. Okay, so what is likely going to play out this week? It is either price would hunt for this is the next area of liquidity. There's a high probability they're going to hunt for the stop losses at this level. There's a high probability. So how am I going to trade Australian dollar USD? Long term, Australian dollar USD is bearish. Okay, it is bearish, but this week I'm expecting Australian dollar USD to pull back. I'm expecting Australian dollar USD to pull back. So I'm looking for a buy opportunity on Australian dollar USD this week. So first, I want to see price clear liquidity at this previous low. Immediately this liquidity is cleared, I would wait for a bullish reversal pattern to form. Okay, maybe a few pips below this level or at this level before I would consider buying Australian dollar USD. Right now, Australian dollar USD is bearish. Now, the reason I wouldn't sell Australian dollar USD at the current market price is that if you go down to, let's go down to daily. Let's go down to daily and 4-hour. Like I told you guys, always see these pairs as a product and think like a businessman. Okay, think like a businessman. So let's go to daily. So what do we have on daily? This was last week candles. 1, 2, 3, 4, 5. This was the candles for last week market. Okay, so where did price start dropping? Price started dropping from this point. So this would have been the best entry for sell. Okay, this would have been the best entry to sell. Okay, this is where we would have entered sell on Australian dollar USD, because what played out here, they cleared liquidity at this previous high. You can see that was what they did. So they cleared liquidity at this previous high. So after achieving that, what happened? They pushed price down. So we would have entered sell from this point after the close of this. This was on Tuesday, right? After the close of this Tuesday bullish candle, we would have entered sell on Tuesday. So this is where we ought to have sell. So if we had not sold from this point, so let's assume this is a laptop, and few days ago or a few weeks ago, this laptop was sold for let's say $1,000, and it's currently being sold at $5,000. Would you want to buy at $5,000? No. We want to see price pull back. Okay, we want to see price pull back. So you could apply your Fibonacci tool. Okay, you could apply your Fibonacci tool, swing high to swing low. Now before you apply your Fibonacci tool, there should be a bullish reversal pattern. Okay, there should be a bullish reversal pattern. On this daily, there is no bullish reversal pattern, but if you go to lower time frame, I'm sure we would find a bullish reversal pattern. Let's go to 4 hour, so you can see the pattern that has formed on 4 hour. This is a doji. This is a doji, right? A bullish reversal pattern. Then let's go to 1 hour. So you can see 1 hour we have bullish reversal pattern too. So we can use this low as our swing low, most recent swing low, because a bullish reversal pattern has formed. Okay, but if you are looking at just the weekly time frame, you won't identify that level as swing low. Okay, but since a bullish reversal pattern has formed on lower time frame, then we can apply, we can use that low as our swing low. So let's go to 4 hour, so you can see now this candle close as what? A spinning bottom, or you call it a doji. Now after the formation of this doji, you are not expected to jump in and start buying immediately. A bullish candle should close after this doji before you buy. For those who are considering buying, wait for a bullish candle to form after this doji before you buy. Now it is possible that before they push price up, they would want to clear stop losses at this low, because a lot of retail traders would have entered buy now. The impatient traders would have entered buy, and their stop losses will be at this level or a few pips below this level. So if you're going to trade Australian dollar USD tomorrow, wait for them to clear sell side liquidity. The stop losses are at this level, so they are likely going to push price below the low of this candle. Once that is achieved, wait for a bullish reversal pattern to form before you buy. That is what I'm going to look out for tomorrow. I want them to clear sell side liquidity, then wait for a bullish reversal pattern to form on 4 hour time frame or 1 hour time frame. Then I will take a buy. I want to see price pull back to premium before I would consider selling Australian dollar USD. I cannot sell at the current market price. This won't be a good entry to sell. If you had not sold from this point, you had another opportunity after price pulled back here, you would have entered sell here and you would have made maybe a little profit on this. Your stop loss would have been few pips above this level. But selling at the current market price, for me, is a very high risk. It's a very high risk, because if you sell from this point, set your stop loss around this level, there's a high probability they will clear your stop losses before price will go in your direction. Okay, so that is my take on Australian dollar USD. Let's move to the next pair, Euro USD. Okay, we're done with Australian dollar USD. Let's go to Euro USD. I'm just going to analyze like 4-5 pairs. Okay, then we're done for tonight's session. Euro USD. Yeah, as you can see, the pattern we have on Euro USD is similar to what we have on Australian dollar USD. So we should expect the same move on Euro USD. So you can see 4 hour. Let's go to weekly. You can see it's the same thing. Both pairs are positively correlated. You can see support has been cleared. Okay. So it's likely they might still want to push price down to clear liquidity at this previous low. It's just a probability. So if I'm to trade Euro USD tomorrow, all I need to wait for is a bullish reversal pattern to form, because they've cleared liquidity at this previous low. So price could likely pull back anytime from now. For those who trade break and retest, after a break from a major support, price is expected to pull back to test that support which has become a resistance. But before you buy, you should wait for a bullish reversal pattern to form. Don't jump in and start buying. Wait for a bullish reversal pattern to form before you buy. So I'm expecting Euro USD to pull back this week, but the long term Euro USD is bearish. But this week I want to see Euro USD pull back. Okay, so you would also see we had a resistance here which has become a support. So price could test this support before we had a demand zone here. So this is the area I will be considering buying. Okay, if you go down to, let's see, daily. Okay, daily is closed strongly bearish. Let's go to 4 hour. So you can see 4 hour also closed. We had a bullish reversal pattern here. Okay, this is a bullish reversal pattern. Now a lot of retail traders would have entered by their stop losses at this level, so there's a high probability they will clear these stop losses and go for this next demand level. Okay, there's a high probability they will clear that stop loss and go for that next demand level. So that is where I will consider buying. This area is where I will consider buying Euro USD. If you also apply your Fibonacci tool, okay, if you apply your Fibonacci tool from this swing low to the swing high, you can see price is also at a discount. So all we should look out for is a bullish reversal pattern to form at a discount. Then we go for buy. So that's my take on Euro USD. My bias for Euro USD this week is bullish. Is bullish. Same for GBP USD. You can see the same pattern. The pattern that we saw on Euro USD, similar to what we have on. Can you see? The support has been broken. A key support level has been broken. Support at this point. Support at this point. That level has been broken. We actually had a demand zone here. This is a demand zone. You can see this is a demand zone. Last week candle closed below the demand zone. This tells me that supply is higher than demand, and when supply is higher than demand, price should go bearish. But this would have been the best place to sell after the formation of this shooting star, this bullish shooting star. That is where one should have entered sell. So it will not make sense to sell from this point. Like I told you guys, when you open the chart and the market has gone 50 pips from the price you're supposed to enter the trade, wait for price to pull back before you execute the trade. Be patient for price to pull back. Once the market has gone in your direction 50 pips from the price you ought to have entered the trade, wait for price to pull back. If price does not pull back, let that trade go. Wait for the next opportunity. It's as simple as that. The reason many people will cry that after executing a trade, the trade goes against them, clear their stop loss, and after clearing their stop loss, price starts going in that direction, is that they enter the trade or they cut the trend very late. Very late. People have made money from the market. They're already cashing out. They're already pulling out their profits. That is when most retail traders will jump in and start selling. Sometimes it's due to FOMO, fear of missing out. Okay, so that is it for GBP USD. Which other pair? Okay, let's look at USD UCAD. UCAD. Okay, let's look at UCAD. So if you are new to trading, you don't know how to identify resistance and support, you don't know how to identify liquidity area, you don't know how to identify fair value gap, I would employ that you go for my Forex mastery course. Okay, you get detail of my trading strategy. The strategy that has made it possible for me to win consistently in the market is available. Okay, if you're in this live stream, you have the next 24 hours to place your order for just 5,000 naira. I've made it very cheap and affordable for those who are participating in the live session. By Tuesday or Wednesday, the price goes up to 20,000 naira. But if you're in this live session, you have the next 24 hours to place your order to get it for just 5,000 naira. I hope that is clear. Those who participated in the Zoom session got it for just 3,500. But for those of you who are participating in this YouTube, you get it for just 5,000. It's not a must. If you have a working strategy, a strategy that is making you money consistently in the market, you don't need to get the course. You don't need to get the course. The course was designed for those who are new to trading and those who are struggling to earn consistently from the market. Okay? It's not a must that you get the course. It's not a must. But if you want to take your trading to the next level, then you should get the course. And when you get the course, you have access to 30 days mentorship. 30 days mentorship. We'll be trading together. We'll be trading together, analyzing the market every day. We'll be selecting pairs that will be trading. Okay, we analyze the market together and we execute. Most times we execute the same trades. Okay, so USD card, as you know, if I'm looking for buy opportunity on GBP USD, then I should look for sell opportunity on USD card. So I'm looking to sell USD card this week. Okay, so first let's just apply our Fibonacci from this swing high. From swing high, what's happening here? Okay, from swing high to swing low. So you can see price is at what? Price is at USD is at premium, right? Price is at premium. You can see it's at premium. So at premium, what do? You look for sell. So just wait for a bearish reversal pattern candle to form. Wait for a bearish reversal pattern to form on USD card and just sell. Okay, wait for a bearish reversal candle to form on USD card before you sell. I think there's a fair value gap around this area. Let's go down to lower time frame at this point. Let's go to lower time frame. Let's see what we had on daily. So I think a fair value gap. We had a fair value gap here. Maybe price wants to fill that gap. Okay, so we had a fair value gap here. Though it has been filled, price has already tested this level, or most likely maybe they just want to test it again. Okay, so we had a fair value gap here, and you can see price has hit that level now. So there's a possibility for price to pull back from that level. Can you see it? So but before you jump in and start selling, wait for a bearish reversal pattern to form. Okay, and you sell, your profit target should be below level 50. It should be at a discount price. Okay, the profit target should be at a discount price. So if you are selling around this area, your stop loss should be maybe around this area. You can use this high or this previous high, but ensure that your risk does not exceed 50 pips. Your risk on the trade should not exceed 50 pips. Okay, so that's my take on USD card. I am bearish on USD card this week. Okay, I'm bearish on USD card this week. Is that clear? Which other pair do you want us to analyze? Gold. We must look at gold. Okay, we definitely will look at gold. Gold, let's look at gold. Gold has been bullish for some time. Okay, it has been bullish for some time. Okay, so you can see how, let's see weekly, you can see how last week candle closed. It closed as a shooting star. Shooting star. A bullish shooting star. Now, after the formation of this shooting star, I believe most retail traders would have executed sell. Okay, most retail traders would have executed sell. Their stop losses will be at this level. Okay, stop loss will be at that level, and there's a high probability these decisions will go for that stop loss. But let's go down to lower time frame. So on lower time frame, we have this shooting star, a bearish shooting star. Okay, this is a bearish shooting star. Now, before you would sell gold, for those who want to sell gold, I would advise you wait for price to close below this demand zone. If you want to sell, I'm actually not going to trade gold right now because the risk on gold is too much. I don't want to trade gold right now. Okay, I've avoided gold for the past 3 weeks because of the risk involved. If you're trading gold now, your stop loss shouldn't go below 70 to 80 pips. Okay, your stop loss should not go below 70 to 80 pips. If you use 20, 30 or 40 pips, they will easily hunt for your stop loss before the market will go in your direction. That risk is too high. 80, 100 pips is too high. That's why I am not trading gold for now. Okay, but if you want to risk trading gold, wait for a candle to close below this zone. You can see there has been rejection from this level, so wait for a candle to close below this support zone before you sell. Let's go to 4 hour. Let's see what we have on 4 hour. Okay, this is an engulfing pattern on 4 hour. Can you see? This is an engulfing, but if you look at gold, if you look at the structure on gold, it is obvious, right? On 4 hour, you can see it is obvious. It is a bullish structure. You can see. So this is an engulfing pattern. Now, before you execute a sell trade, you want to ensure that the structure has changed from bullish to bearish. And at what point would this structure change from bullish to bearish? It is when price break this previous higher low, this recent higher low. It is when price breaks this higher low, that is when we would say the structure has changed from bullish to bearish. Now, after shift in market structure, then you should wait for price to pull back to fill the fair value gap. The fair value gap has been created here. Let's go to 1 hour to identify the fair value gap. This is what I teach in my course, okay? So most of the things I share in my, I shared in my course. I also use those strategy in the live session. That's why I said it's not a must that you get the course. It's just that those who will be getting the course would have access to 30 days mentorship. Okay, 30 days mentorship. I will be attending to all their questions during a Zoom session. At least in a week, we'll have 2 to 3. We have Zoom session 2 to 3 times in a week for those who will be accessing the course. So you should wait for price to pull back after a shift in market structure. Okay, after a shift in market structure, wait for price to pull back to this fair value gap. Now, some could also identify this level. Okay, at this point that there's a shift in market structure. Okay, they could identify this level as a shift in market structure. So let's assume we're using this level as our shift in market structure level. Then we should wait for price to pull back. So it's either price pulls back to fill this gap for us to consider selling, because if we sell at this point, our stop loss will be at this level. And if you consider the risk, this is above this is about 100 and this is close to 600 or 700 pips. Okay, so you don't want to take such risk. So we want to see price pull back to this zone before we sell. So that's my take on gold. I would not advise you jump in and start selling gold right now. Okay, so that's my take on gold. Is there any other pair you want us to look at? Is there any other pair? Give us the same grace of 3.5. If you will make your payment tonight, before 12 a.m., then I will give it to you at 3.5. You would have access to the course. Okay, 3.5. But the 3.5, you're not going to have access to the 30 days mentorship, please. With 3.5, you can't have access to 30 mentorship, because that is not even enough to pay for data. I'm not even considering the time I'm going to dedicate to you guys. Okay, so unless you just want to get access to the replay, then you pay 3.5. But if it is mentorship, 30 days mentorship, you pay 5,000. Okay, let's look at GJ. We'll just look at maybe GJ or EJ. Both are positively correlated. So let's look at GJ is also one of my preferred pair. So I'm considering buying GJ this week. Let's start with the weekly time frame. But if you look at this weekly pattern, this is bearish, right? Yeah, bearish. So if I'm considering buying Australian dollar USD, I think Australian dollar USD and GBP JPY are negatively correlated. They are negatively correlated. So I should be looking for sell opportunity on GBP JPY, and you can see the pattern we have here on the weekly time frame is a bearish pattern, right? We had a shooting star, we had a spinning top, and when you see several bearish reversal pattern like this, is a strong indication that the trend is going to change from bullish to bearish. So after the formation of a shooting star, the rule is that you wait for the next candle to close bearish. So last week candle closed bearish, so strong indication that GBP JPY is likely going to go bearish. So I'm going to be looking for a sell opportunity on GBP JPY. Okay, so let's go down to lower time frame. Let's go down to daily. So on daily, we had a support here. Okay, support has been broken on daily. Okay, this is the support. You would also see at this point, it was a resistance which became a support. It was a support at this point. Okay, so it has been broken. This level has become a supply level, or you call it your resistance zone. Okay, so after the breakout, for those who trade on break and retest strategy, you want to wait for price to pull back, okay, to fill that fair value gap. Sorry, you want price to pull back to test this support, which has become a resistance, before you sell. I also believe a fair value gap was created after that breakout. So let's go to 4 hour. I believe a fair value gap was created. So you can see the fair value gap that was created on, you can see. So we want to see price pull back and fill this gap. If you apply your Fibonacci, you might take it from this swing high to swing low. So price is currently at a discount, okay, and you can see the pattern we have here. This is a bullish reversal pattern, and I also think liquidity has been cleared. You can see I shared this in my course, those who participated live, right? These are the things you need to confirm. When a candlestick pattern forms at a support, a previous support level, and also liquidity has been cleared. The reason for this bearish move was to clear liquidity at this previous low that they have achieved, and the candlestick pattern that formed is a bullish reversal pattern. So we want to see price pull back to a premium level. If I want to sell GBP JPY, it will be at a premium price. So I want to see price pull back to premium level before I sell. But I don't just want to wait for price to come here before selling. I also want to take advantage of this pullback. So that is it for GJ. I think if we go to EJ also, it will be the same pattern. It will be the same pattern. Let's go to EJ. So that will be all for tonight's session. So you can see on EJ, liquidity has been cleared. You can see liquidity has been cleared, and the bullish reversal pattern has formed. So you can see we had a support here. Stop loss is cleared at this level. Okay, now most retail traders would have jumped in after the close of this bearish candle. They would have jumped in because they see this as a valid breakout. But when you have an understanding, or when you understand the concept of ICT, institutional concept, when you understand the concept of liquidity, you wouldn't have jumped in and start selling, because you know that it could be that they just cleared liquidity at this previous low. But most retail traders would have jumped in and start selling, and they will be trapped on this trade. So that will be all for tonight's session. Any question? Any question? Any question? Any question? I don't want this weekly market outlook session and the daily market outlook session to be too long. At maximum 30 minutes, we should be done. Any question? Any question? Mr. Paul, I see you. Mr. Abraham, I see you. Mr. Eze, okay? And Mr. Jeremiah, I appreciate you guys for always showing up. Any question? Any question? Is there any other instrument? Like I told you guys, you don't have to trade all instruments. Just pick one or two instruments, because all these pairs are positively correlated. They are positively correlated or negatively correlated. Just pick 2 or 3. My preferred pairs is GJ, EA, and Australian dollar USD. Okay, you don't have to trade all instruments. No question. Okay, so if there are no questions, that would have to end this session. I appreciate you guys for always showing up for this class. I wish you guys a profitable trading week. Please ensure you apply proper risk and money management. Always use stop loss on every trade, and ensure you don't risk more than 2% of your capital on every trade you execute. Also remember, we are expecting a lot of major news. Not too much major news for USD this week compared to last week. Okay, so you should also consider the major news. Tomorrow there's a major news from the United States. I think 2-3 major news. So we should expect high volatility maybe during the New York session, okay, because of the major news that will be released. Normally on Monday price action movement is always erratic, unpredictable, but because of the major news that will be released tomorrow, we could see high volatility in the market. Okay, and I think on Wednesday also. So just check the calendar. Go to forexfactory.com and check the calendar to know when the news will be released. Okay. Any question? So if you're interested in getting the course and also having access to the mentorship, please send me a message on WhatsApp. Okay, send me a message on WhatsApp. I wish you guys a profitable trading week. If you have any question, you can drop it in the WhatsApp group. Do have a wonderful night.